Good morning. So, over the weekend, I did some minor adjustments to my microphone. Hopefully, you will hear more of my voice and less of my computer fan. The mic is very close to my mouth, so hopefully it's not too loud for y'all. But let's get started. Let's go up to the weekly on ES. So really big picture. We have this monthly fair value gap. We have this weekly inside that we just missed last week. We're coming back up. Go back to the daily, just some context. So we got long-term high, retracement lower. Now we're right in the middle of this swing high and this swing low. So even on the weekly, we are at a pretty hard point to determine price action wise, because we are right in the middle of these two swing high, swing lows. Let's go down to the daily. Okay, the daily unfortunately tells a very similar picture. So a long time ago, like last week, we came down and we spent some time in this daily fair value gap from a while back. Candle bodies respected it nicely. We had this large candle up, down, and then we still came back up. Came back up to this premium daily fair value gap. Just wicked into it by a tick, and then we're coming back down. And if you watched ICT's price action breakdown that he posted last night, he said something similar, where he's not really interested in taking any trades until we leave this BISI right here, which is denoted by these dashed lines. Sometimes I use the dashed line, sometimes I use the box, just so there isn't too much of one thing. But yeah, so he's not interested in taking any trades until we leave that. And that's kind of just because we could go either way. So I think if you're somebody who still feels a little lost when they open up the charts, or like overwhelmed, like understand that there are times where even experienced people open up these charts and they're like, yeah, I don't know which way it's going to go. And right now we're kind of in that area. If you looked at the economic calendar, tomorrow we have CPI at 8:30 in the morning. And something I've noticed that's pretty reliable is the days prior to CPI, we just range bound. You could make the argument that large institutions and funds don't want to get in, or they are waiting on news to figure out which way they want to go. No matter how you view it, I've noticed myself personally, it's often a range bound day. They just kind of build liquidity and then act upon it during the news. So today it's going to either be short scalps or no trade. I mean, we're going to read price and see if there's maybe some nice structure to target 5 handles for some inside the range liquidity. But my expectations are still kind of low just because of CPI tomorrow. So ICT said he's not interested until we leave this BISI fair value gap. We're also in this SIBI daily fair value gap. So what I'm looking at now is how we respect the consequent encroachment of that today. If one possibility you could see is we set the high in London and then we retrace, and I'll be looking to see if that's the case, or if there's any proof of that by if we start to get below this consequent encroachment of this fair value gap. If you notice last week, the candle bodies respected the bottom of this fair value gap. So we wicked out of it, but we still closed within the upper or like above 25% of this bottom quarter, and now we're going up. Let's go down to the 4 hour. Nope, not 4 minute, 4 hour. So on the 4 hour, we're still looking at the same daily levels. We do have this new 4 hour fair value gap. I also added the consequent encroachment of this really long wick. So if we were to retrace it all today, there's also this little 4 hour fair value gap. If we were to retrace today, I would want to see the consequent encroachment of this wick hold price for bulls. We're very bullish up into the open, and if you look on the lower time frame, so we have this larger daily fair value gap in orange, and then there's on the top half of it, there's not many inefficiencies up here. So if we did want to get above these two fair value gaps and kind of send it closer to this new week opening gap up here, I could see it getting through the top half of this daily fair value gap pretty quickly, just because there's a lack of inefficiencies over on this side. Let's go down to the 1 hour. You can see on the same thing is true on the 1 hour. On the 1 hour, I didn't highlight many fair value gaps. As you can see, these two fall within this 4 hour. When I have a lower time frame fair value gaps fall within a higher time frame, I stick to the higher time frame, and I just mentally, so if we're heading towards them, I'll be like, okay, mentally that's a 1 hour, or I'll wait until we're actually heading towards them to call them out. But so we consolidated for a while here. Now we're breaking up into the top end of this daily fair value gap. We're above this new week opening gap right here. We'll see how things play out going down to the 15 minute. I am liking the way structure is looking on the 15 minute. We had this run. We're just getting some clean highs and lows and runs. We finally got above this new week opening gap. So anytime we are like right on one side of a new week opening gap, it's just really hard I feel like it would be for anyone. If you're like closing above new week opening gaps, it's going to be like, oh, we're going to go short, because like you'd want to wait until you close below something like that before you enter shorts. I like to use them more as targets. I've always noticed anytime I use a fair new week opening gap as a price target, I've had a lot of success in that. That's kind of how I personally like to use them. You can use them as like entries, like if we were to bounce off this, you could use it, like if you were expecting higher prices. That's not my forte specifically, but yeah. So we will go lower than the 15 minute briefly. Let's head over to NASDAQ, and then we'll go up to the daily on NASDAQ. The daily on NASDAQ, you can see. So we missed this weekly fair value gap last week. Coincides similarly with the weekly fair value gap we missed on ES last week. This is the premium fair value gap that we wicked into last week for NQ. You can see we had no candle bodies close inside of it. We traded just past the consequent encroachment, this red line, and then we came back down. We are now spending time similar to ES in this BISI's fair value gap. Came back down, and see the bodies couldn't close within the consequent encroachment of this daily. like that for higher prices, but it's still very similar. We're smack dab in the middle of this swing high and this swing low. So until we get a clearer picture, maybe late this week, we can start to target either one of those. Like if we start to close some bodies above the swing high, then it's okay. We target the buy side liquidity. And if we start to close some bodies below the swing low, then we start to target the sell side liquidity. But right now, it's pretty indecisive. We do have this smaller daily fair value gap right here, which also coincides with a similar SIBI on ES. I'd like to see, how we respect that. This one's a little bit smaller, and NQ likes to run a little more, so I'd be looking more towards ES if I wanted to try and gauge like a sentiment off of this fair value gap, just because the ES one is larger. Going down to the 4 hour. So we got a similar 4 hour fair value gap as in ES. Then we got this SIBI 4 hour. We'll see. I got this SIBI 4 hour. It looks like I'm kind of playing with consequent encroachment of it right now. Go down to the 1 hour. It's looking pretty similar. Now, something I like this morning is ES and NQ had pretty similar structures. They were coinciding nicely. You can see, so here on NQ we have this long-term high, low, then we have this run up, and especially in NQ we're wicking into this fair value gap. Watch on ES, very similar, long-term high, low, high, run up. On both, we set a new high here, breaking this, come back down. If you can see on the ES 15 minute, we're actually respecting this 4 hour fair value gap with the bodies. Love to see that. Anytime you see the lower time frame, bodies or wicks respect a higher time frame. Very good. Respect it, came back down. Now we're setting new highs. Yeah, so very similar structure on these two if you toggle back and forth, which I like to see for trading. Check out the dollar real quick. Dollar, sell side liquidity, run up, took buy side. Go to the day. Daily gets a little more interesting. Okay, so I know this is a lot. I'm sorry. So we have this daily fair value gap here, denoted by the SIBI. Then we have this volume imbalance between these two candles. You can see there wasn't a body close between these two. You'll see when I move my cursor. So that's something that ICT called out specifically. So we have it on the chart. You can see right on this day, we wicked right into both of them very nicely. And now we're having a pretty hard rejection of the top of this daily fair value gap. When I see us get this high into a fair value gap, this is more on indices. Sometimes the dollar doesn't always behave exactly how the indices do in terms of PD arrays, I've noticed. But when we get really high and get some body closes at the top of a fair value gap like this, then we have this rejection. What we could be doing is we either tapped into this volume imbalance, and that's a reason to go lower. But since we had, let me move this. Since we had this whole run up and there was no retracement into any discount, I'm feeling that what we're doing right now is we're just getting in a little bit of, like, we took buy side and now we're just retracing into some discount to possibly take this buy side. So we just need a little bit of retracement before going up again. So on the dollar, and you have another thing on the dollar is similar to the indices. You know, you could make a case for bulls and bears right now. I'm sure after CPI tomorrow, that won't be the case anymore. It's funny how these things always line up right before the news driver. So we're wicking down into this daily fair value gap right now. Something else, I highlighted this breaker structure. It's breaker, low, high, lower low, break. I highlighted it just because I wanted to see how we react off of it. I wouldn't put a breaker on the dollar, but I have it here just for my journaling. I want to see, you know, if we do retrace into this fair value gap and we do use it as a discount to go higher, do we come down? Do we respect this breaker? Do we stop at the breaker? It coincides pretty nicely with consequent encroachment. So I like that. That was more for like a little journaling research on my part. Let's go back to yes and set up our 3-chart view. So here we are. We have the 15-minute on the top. We have the 5-minute on the bottom left, and we have the 1-minute. I use this top, and this is where I will cycle through anything that's 15-minute or higher. How I use these windows is, you know, you can see it goes from lowest counterclockwise, clockwise to highest, but I always work top down to give a little more context for myself on what's happening on these lower time frames. And, you know, sometimes if the 15 and the 5 are telling a similar story, so if you look at these two charts, you can kind of derive the same thing from both of them. You know, we have this high, we have this low, we break the high up here, we can see the new week opening gap in both of them. So sometimes when that happens like that, I will bump the 15-minute up to the 1 hour. Just because, you know, if the two charts are providing the same context, you're going to want a little more. Go to the higher time frame and get more context. Okay. So like I said, if we do take a trade today, it will be most likely a scalp to some like internal liquidity, you know, like some equal highs or like breaking out of a consolidation for a quick run. My fans are cranking right now on my computer, so hopefully those aren't too loud and my voice is what you hear more than that. So these red lines denote the start of our trading session. We have our first window between 9:30 and 10. This line here I use as the dollar, just so I can make sure that the dollar and the indices are working in tandem. And, you know, if we're making higher highs on the dollar, or higher highs on ES, we're also making lower lows on the dollar. Okay, so we're just going to wait a few moments till we hit the open. Okay, we're about 1 minute out from the open. I am seeing on the 5 and the 15 minute what I like for like 2023 model structure that I like to trade within the first 3 minutes. What that usually entails is like a run above liquidity, so you can see it right here, and then a break below, and then targeting that. I don't think that's what's going to happen. I think we're going to actually go, I think we're going up, just because you can see in this 5 minute, we were respecting, especially in the 15 minute, we were respecting bullish PD arrays a lot more going into here. So I'd have to see some real bearishness on this open. Pretty indecisive right now, so let's just wait this one out. But if you notice on the 15 minute, we're respecting bullish price PD arrays and a dropping dollar. Check out the dollar on the. Yeah, so if you can see, the dollar ran up, swept some equal highs, wicked right above them. We've been dropping all morning on the dollar. The dollar has some lows down here that it looks like it wants to take out. Yeah, so price looks like it wants to return to the top end of these two daily fair value gaps. I do think today is going to be pretty, I don't know. I won't make that statement yet. I was going to say that I think it's going to be a consolidation day, but the way we've opened actually doesn't show that. Had a decent open. On the 5 minute, you can see something I've always noticed is, we consolidate, and then when you finally have the run that takes out the high, the fair value gap that's formed, that's the one that it retraces to. So we have this respect of this bullish PD array on the 5 minute right here, body candles wicking down, candles respecting it, down close candles respecting up close price, come back up, down, up, pretty aggressive open. It's looking similar to Friday's open right here. Friday open, I had the consolidation with the high, consolidated open, looking pretty similar. The dollar is still looking very heavy, still has yet to come touch these lows. Okay, so came up. This bottom of this candle looks like it's respecting the consequent encroachment of this wick, which is nice, leaving No fair value gap here. If we keep going up, that'd be pretty bullish. Okay, so what I'm going to do right now is I'm going to draw out quarters of this daily fair value gap. I do not have a quarters setting. On my fib. Okay, so this fair value gap, this daily fair value gap right here. I'm watching. For a second, it looked like the body on the 1 hour wanted to respect this quarter. We still have another 30 minutes for this 1 hour to print, but it's helping us tell a narrative when we're within one of these very large SIBI / BISIs. It's interesting because you can see on the lower time frames, look, this is where we consolidate right around, it ran from 50% to 1/4, boom, run, consolidated right below the 50, broke above it, came down. Look at how the candle bodies are respecting this 50% level. And we come right up. Now we break above it. We have this hard rejection. Now having these two candle bodies, struggle to close above this. Right here, as you can see, the dollar is not looking as heavy as it was. So what I'm doing right now is I'm trying to map out a narrative. Dollar coming down, came real close to taking this low. Something I noticed on the dollar is the dollar likes to set up, just like leave equal lows and highs everywhere. So I wouldn't wait for a low to be taken on the dollar. I feel like it does a little more classic support and resistance than the indices do. Okay, so large, looks like we're rejecting this quarter mark on this fair value gap. Even the 5 minute couldn't close above it. Now we're getting a strong pullback. Strong pullback. This is very similar to Friday's open. You have the dollar bouncing really strongly off of that equal low down here. See what the Nasdaq's doing. Nasdaq following very similar structure. Okay, so even the 15 minute couldn't close above this quarter mark. It's kind of hard to see. I'll redraw it. Actually, I don't know if I can redraw it. Here we go. Just about that. Okay, so I want to see how we handle this low and this new week opening gap. If we are going to see some lower prices, I want to see us not regard it at all. can see right here, I'm also watching the dollar. I want to see the dollar take these highs. Okay, look, see how we reacted right off that 50% mark. If we were to come through this new week opening gap aggressively, I would like to use it as an entry for lower prices, not the new week opening gap. I'd like to use it towards my narrative also because we're taking this low on the 5-minute. So we're taking the low on the 5-minute and the 1-minute. We're gonna close below the new week opening gap, which I like for lower prices. I wouldn't want to try and short it above it. I don't like shorting above and through new week opening gaps. I want to short below it. So the high, low, high, high break. This would not be a bad time for a 2023 model entry. We have it on the 5-minute. That would entail entering on a fair value gap. We'll see. We're going to be patient here. Our targets would be this internal range liquidity below. I'm not going to get too excited about it yet. Again, I'm very hesitant just because it's the day before CPI. On the 5-minute, you can see this down close candle not supporting price. Well, actually, it is a little bit, but we're going to want to watch to see it violated. I mean, we have these 3 consecutive candles just get blown through, which are probably could constitute a breaker. Yeah, see, you had this wick come right up to the bottom of that. Perfectly, right there on the 1-minute too. That's not my entry. I do eventually want to incorporate that into my arsenal. I've watched it happen a bunch of times, and the breaker, when you're right, you're right. Look, we came up to the tick. This high came in at 44.84 even. These lows are 44.86. No, 44.85, 25. It's actually a little off. Okay. I'm going to start cycling through. No fair value gap entry on the 1 through 5. The dollar did make a little shift in structure. Came up, but we'll see. We'll see how the dollar wants to behave here. Look what NASDAQ is doing. I wonder if you had the fair value gap entry on NASDAQ. Nope. No, you did not. So this is tricky because what you do is you have these fair value gaps up here. We have this shift in structure, but you have this new week opening gap. And that's why, me personally, I'm not a huge fan of, I like using new week opening gaps as targets. If we were traced up into this fair value gap, I would not want to go short off of it because we're closing above this new week opening gap. We could be setting up a fair value gap right here, which I would like to see. I like when fair value gaps form as we take lows. So we have this swing low right here. And especially on the 5 minute, if we created a fair value gap on the 5 minute and then we retraced back up into it, and a 1 minute entry coincides with that, I usually like to see that. Just watching price. I'm going to compare the 5 minute structure on the NASDAQ and ES. So right here we have the NASDAQ. We are taking these early morning lows, which we're not. So NASDAQ's a little heavier. NASDAQ's usually the leader, so that's fine. Okay. Some big candles. Okay, so looks like the dollar is turning around. That's not the dollar. So the dollar came down, made an equal low, reacted off that zone. Then we came up, we took out that swing high right there, came back down, and now we're dollar's pumping again. So I'll probably watch the 1 minute line chart to see how aggressive, how high it wants to go. Could look for an entry. There hasn't been an entry yet. I'm surprised we haven't seen a 2023 model come. You know, we had the run up on the 15 minute and the 5 minute, and then we had the aggressive break, but there actually wasn't a fair value gap to be entered on between the 1 and the 5. I didn't check the 1. I checked only the 1 on NASDAQ, but there didn't seem to be one on NASDAQ either. But we are now below this new week opening gap, and we are now below 50% of this daily fair value gap. Let's go check out the 1 hour. Yeah, so even at this 8 a.m. candle, oh, look at that. 8 a.m. candle closed right below consequent encroachment of this daily. Even this one opened and then shot back down. So I like these lower PD arrays as targets. We haven't had any reason to enter yet. The dollar. Let's bring the dollar down here. So that's the low on the dollar, and we want to see how much higher does the dollar want to go, which is this yellow line right here. We want to make sure that if we're expecting lower price action on the indices, this dollar is also taking or continuing to make higher structure. Okay, so we're reacting off the bottom quarter of this daily fair value gap. Still no way of entry yet. If anything, it would probably be a retracement to here. I would really like to, if price held off until 10, and that was our silver bullet entry, that would be nice. Okay, so you can see here on the dollar, this yellow line, we came up, took another high, retraced lower. Let's see if dollar wants to continue printing bullishly. Check out the Dow. The Dow is not looking too bad today. Normally I feel like it doesn't coincide with the other two that well. Okay, so NASDAQ, we took these lows on NASDAQ. Again, we're only gonna do quick scalps to internal range liquidity today. With CPI happening tomorrow, I thought we were gonna consolidate. We're actually moving more than I expected today, but with CPI tomorrow, I'm not trying to take on too many handles. Just quick scalps until after. We'll spend the rest of the week looking for range days. Dollar looking like it wants to come back. So for this swing projection, we just took one standard deviation. I do like how it's been waiting for a fair value gap to re-enter a fair value gap. That's given me some good hope for our 10 a.m. silver bullet. Still got a few more candles to print before we get there. The 5-minute candle bodies are toying with the bottom quarter of this daily fair value gap. But after seeing on the hourly these two candle bodies close below the consequent encroachment, I like a more bearish narrative, at least for some quick scalps. The only concerning thing is how NASDAQ took these lows. So you have a little bit of an SMT divergence right there. NASDAQ took those lows, the Dow did not. I want to see how we treat this going into prior to 10 a.m. With this kind of consolidation here. I would have, especially when you have such small fair value gaps, when there's consolidation right below them, sometimes I won't do such a quick entry. I want to see how the candle bodies respect it, because whenever you consolidate, you consolidate. You know, the way the market works is you consolidate, move, consolidate, move. So with a consolidation happening right below this, prior to 10, I wouldn't enter on the first touch of that. I'd want to see a candle body respect it. And if you notice here, the dollar's kind of puttered out on its bullish run. We had this low down here, came up, broke some structure, took out some highs, and what I was hoping to see was it would retrace a little and then continue going higher. But if you notice, we actually had this aggressive pullback down on the dollar. We're looking at the dollar 5 minute right here in the bottom. You know, all morning it was kind of going down, then we had that retracement. So I don't think the dollar, it looked like it's kind of running out of some bullish steam. We have this, we'll see. Okay, so came up and just tapped it. Let's see how the candle wants to react. Technically, that's an entry. But okay, we wicked into it. I don't even have my paper trading logged into right now, so we'll do that. I'll go through it later, but if you were watching the live streams from last week, nothing's really changed on this end. Okay, so wicked in, candle body close. Working in. I like how this is also a 5 minute fair value gap. Take that off for now. I'm a little hesitant on this dollar though. If this dollar was continuing to make higher highs, I would be like, oh, that's without a doubt going lower. But this dollar is kind of showing me some indecisiveness. Like this dollar can go lower, and if this dollar goes lower, this is 100% gonna get blown through. But we have three wicks right into consequent encroachment. Reject. 5 minute wick. Not bad. But kind of what I was saying about the dollar being indecisive, this is one of those times where it's one of the reasons why I like the silver bullet so much, because we know the entry is going to happen at 10 a.m. So we see this, we don't have to worry about, I just missed the move. Because no, in about 2 minutes, we know that we are going to have another fair value gap entry. And what that does is this lends more to narrative. The dollar is dropping a lot. Seems like we're going to get a close below this 25 bottom, 25%. I am liking downward price action. Honestly, I think if we didn't go down and we turned around, that would very much just be a product of them generating liquidity for the news event tomorrow. Okay, wow, that would have been nice. But like I said, really, we're not trying to take every trade that comes across, and we know we're going to get this silver bullet coming. So what we'll do is now that we know we're respecting the bearish PD arrays, I'd be a lot more willing to enter like on one of these fair value gaps. Especially if we like get a close below here, because I want to see these up close candles support downward price. Okay, so you can see us revisiting this 4-hour fair value gap. On the 15-minute earlier this morning, it was respecting it pretty well. So I think I am not surprised it's respecting it. But if we get a retracement up into one of these fair value gaps, I would go short. I would go short, targeting these lower prices. I don't like how the dollar is reacting, but structure's looking good. Okay, let's see. I'd enter too short there. Okay, so for stops, I like this swing high, because anything above this swing high, I think we'd return up to this new week opening gap. I don't like how the dollar is still making these lower lows, but if the dollar on the 5-minute starts to break this low, we'd probably look to exit. If it did break that low, I think we would be probably above this high, so that's fine. Let's watch how we respect these fair value gaps. So that's okay. I wouldn't even be surprised if we came back up into this one. What would really start to worry me is this high. I am watching this dropping dollar. I don't like it. This candle body, we had a close at this consequent encroachment. If we can see this consequent encroachment hold off prices, I think we could see the bottom of this daily orange fair value gap. There's a lot of colors right now. I apologize. Let's check out how's the Nasdaq's doing on the 1-minute. Nasdaq didn't make a lower low, so we have an SMT right here. We have the lower low on ES. We have disregarding. See how this candle body closes. The dollar's dropping. You can see the dollar dropping below this low right here. Okay, we might be offsides on this one. Let's see how you respect these PD arrays going forward. If we show no respect, actually I'm going to drop this down right to that top. If we show no respect to either of these PD arrays, then I wouldn't want to be going short. This dropping dollar is already a warning sign for us. Okay, so watching how we're reacting, the dollar going lower. I'm not going to feel confident until I see us either leave this PD array to the downside or the dollar turns around. I do like how we just wicked into this one, but I'm going to see how we respect this second one coming down. Okay, you can see the dollar looks like it wants to make a swing low on the 1 minute. The 15-minute is still looking very bearish. So we have higher time frame structure on our side, but just with the day, I don't know if I sound like a broken record. With it being the day before CPI, they're just trying to generate liquidity right now in my mind. So we're just looking for scalps. I'd want to see us take this low with some force. If we don't take that low, you know, I'm gonna move the stop right to there. So moving the stop to the top of this, we'll call that the silver bullet for the day, what we are projecting. Just because, so one thing I always look for is when we have these, like a lower low, I don't like it when there's 3 lows and we don't run through price, especially when the NASDAQ isn't making these lower lows. So what I think is happening right now is they could be generating liquidity. They're trying to get people thinking, oh, we're going short, we're going short. And we are on that side of the trade right now. But we're in it. There's still, let's watch this out. Okay, so for target, a little early to be talking target, but we do 5 handles for low-hanging fruit. Okay. I got lost in my price right there. Dollar. Watching dollar. NASDAQ looking like it wants to roll. So, where's my... Here, this is what I wanted. Okay. First low-hanging fruit objective is 5. We will buy back 1. Like I said, I really want us to take this low with some force. We didn't, and that's concerning to me. And the dollar is still going lower. What we'll do is I'm going to move this stop just above consequent encroachment of this silver bullet. There's this SIBI right here. I like how we, on this 1 minute candle, we came up and just did an institutional order flow entry drill. This price action is wonky. Because if the dollar was not going down, this would be a for sure 5 handles. Yeah, NASDAQ still don't want to drop. Okay, we'll be patient here. I like where this stop is. Don't want to risk too much the day before CPI. Stop is, you know, we have this SIBI and it's above 2 PD arrays. Again, we could, you know, there is a scenario where we come retrace, enter into this blue fair value gap, and then send it lower. I'm not too interested in that with this dropping dollar. Okay, I like how we respected the consequent encroachment of this SIBI. It's like it wants to go there. It wants to retrace, but the dollar just won't let it. The dollar's dropping a lot. You can see on the 5 minute, we have it here. Let's look at the NASDAQ 5 minute. The NASDAQ 5 minute, we took these lows. So that's another SMT divergence. I'm gonna take one off the table here, just to mitigate some risk. So I'm gonna buy back one right there. All right, there we go. Still didn't want to close. Okay, let's see. Let's watch these candle bodies. Up to consequent encroachment. See if that holds it off. If it doesn't, I'm not interested. Get these executions off right now. There we go. Yeah, so today wasn't our day. The dollar was definitely the red flag in this one. And if you notice, something that I actually didn't even call out, I try and narrate my thoughts. We're bouncing right on this 4 hour fair value gap. That it's hard to see. So if you can see, we came down, respected that early in the morning, and then I wasn't even paying attention to these 3 5-minute candles that were just respecting the hell out of it. We could very much, see a deeper retracement up here and then send it lower. Markets, I mean, whenever I see this, also, how are you going to argue there's not an algorithm when you see 4 candle bodies like this? You think that there was just enough buying and selling pressure to perfectly align 4 minutes? Like, oh, if you want to count these ones too. Anyway, we're still in respecting this silver bullet. So look at that. We came up to the top of it, coming down a little harder. Dollar's bouncing right there. I mean, I took one trade already. Maybe the stop was a little too tight. If you entered at the top of this silver bullet, you'd be the majority of the way there. There we go. Now we're going lower. Well, okay. So we got a little lesson today. Stops were a little too tight. Let's just watch. See how the dollar's bouncing? It was just waiting for that dollar to make a swing low. And the NASDAQ's making this lower low too. Okay. There we go, guys. If you're in this trade right now, kudos to you. Yeah, stop was probably a little too tight. If anything, should have been like right at the top of this BISI or SIBI. Yeah, that's one of those things where I do every now and then move my stop a little too eagerly, and it's a little bittersweet because it's like, okay, you're practicing risk mitigation, but you got stopped out. You were on sides, but I feel like it's an easy thing. I'd rather have if I was to have one problem, I'd rather have that problem than many other problems. So if you entered at the low of the silver bullet, you're going to want to wait until this red line, which is the bottom of this daily fair value gap. Okay, so in hindsight, we had leading up to 10 a.m. came in. This was our first retracement into a fair value gap after this drop. Respected it very nicely. Came back down. We had two fair value gaps. Entered into the top one. Came back down. I mean, if you entered on this top one, which would have been a little, I guess I was a little too eager. You'd already have your 5 handles. If you could have entered at consequent encroachment of this one, you'd be just a tick short of your 5 handles. But yeah, so as you can see here, even on the 1 minute, we were respecting this 4-hour fair value gap that bounced me out. I like how on the 15-minute we're also breaking structure, so we have high, low, higher, high. And as soon as we can get a close, if we do get a close below this low, then lower prices are likely. But we're still in this daily fair value gap, and I wouldn't be surprised if we stayed inside this fair value gap the rest of the day. Kind of makes sense, we went all the way up to 75%, came down to the bottom. It's probably just generating. We're gonna just generate liquidity all day. For tomorrow's news driver, a little bummed on the loss. I guess we still haven't hit that red line yet, so I wouldn't have even taken profits. We'd still be in a trade, but trailed the stop too quickly. And I think I said at the beginning, I was like, I would not be bullish until we take this high. And yeah, that'll be something for the journal. Okay, so you can see on the dollar, let's go to the 5 minute on the dollar. So these two lines are these two lows. So the dollar came down, bounced, retraced, came aggressively back down. And we were in the trade as we were making these new lows on the dollar. I guess technically I broke one of my rules, because usually in one of my rules I do state that I will not trade against the dollar, the narrative. And we are making lower lows. So we are making lower lows on the indices too, but they're not in sync as they should be. Which is probably why we still haven't having a close below these lows. Yeah, so dollar's still dropping. We're making a new low on the dollar. Okay, we'll go to the account balance. I can show y'all $75 loss. So if you notice, we have this 0 out here. That was when I took a little bit off the table because I wasn't liking how the price action was happening. And then we moved our stop a little too quickly and took a $75 loss. But so in my past, I don't know if you guys, I want to redo that intro video on the channel. I talked about my strengths and weaknesses as a trader in that video. And in the past, before I was able to find a lot of consistency trading, what would happen is I would take a small loss like that. And then, I'd be like, oh, I moved my stop too close. And then I would try and enter on a less favorable entry. And then that small stop, and then I'd enter down here. And then I'd be like, no, so now I need to move my stop all the way up here, because that's when it'll really be bullish. And then I would just ignore. It's like you letting that gambler take in. That gambler ignores the fact that we're still making lower lows on this dollar, and price is showing no real heaviness to the downside. And then come up, and that $75 loss would then turn into like a 250 or 300, just like wipe away a whole day's profits. But if you look, this was last week. So if just finding success in trading is making your losses small. And that's very cliche to say, because it's so much easier said than done. But like, for example, I took that one off the table. It came in as a 0 P&L. So this technically would have been doubled. This would have been 150. Took risk off the table, took a smaller loss. Even if we took the win, like, you're not going to get mad at a win. I would rather, so looking at it now, I'd rather call this the silver bullet. And then we'll just make that a nice silver fair value gap. Cool. So for the journals, you could have got 5 handles to the downside if you took the higher fair value gap here on the 1 minute. We still have the drop in dollar. Yeah. So if you were looking for higher prices, yeah, so I'll stick to that narrative. If I was looking for higher prices, I would be waiting for a close above this fair value gap. I think as long as we're respecting this lower one with our body, the candle bodies, you could see a retracement lower, but I wouldn't want to be in that trade. See how these bodies respect. We'll watch that, how it respects it. Seems like the body is respecting consequent encroachment. Check out the 5 minute, just some stagnation. Yeah, so look at this. So we took this high, aggressively dropped, took this low. Looks like we're heading a little bit higher. So range bound day right before CPI. Let's pull this across. Yeah, we still got the drop in dollar and we're going higher. Interesting. Let's go look at the 4 hour. Got this wick. We have this 4 hour fair value gap that we just missed. That was our real target. Oh, the dollar's getting heavy. Yeah, so we had a close above this fair value gap silver bullet. I would not be expecting downside. If we were to, for some reason, go lower, then I would just not even pay attention to price for the rest of the morning session. Yeah, just a lot of slop. Well, if you were able to, if you stuck around with me, I appreciate that. I'll probably just watch price a little longer, but I will not be taking any more entries for this AM session. And I might come on and read the PM session if it looks interesting, but it's the PM session the day before CPI. Like, yeah, this is all just generating liquidity. If you guys watched ICT's breakdown last night, he was saying until, I'll go to the 4 hour for this explanation. I'm on the 4 hour. Until we get out of this daily fair value gap BISI, it's denoted on the daily by these big dash lines. I mean, he's not interested in taking a trade because we're really in the middle of a lot of, it could go either way. So I have this swing high, we have these swing lows down here. I wouldn't expect these lows to be revisited until we take this low. And I wouldn't expect these highs to be revisited until we close above this daily fair value gap. And we're just smack dab in the middle of it. We could go either way. You can see we're kind of in the upper quarter of this dashed fair value gap, but this orange box is a SIBI on the downside that we are just stuck in. Okay, so on the 1 minute, retracement came up. Small loss on a Monday. Okay, so here's the context for us all. Let's see. So today we still might not close above this consequent encroachment. Consequent encroachments right above this new week opening gap. It's always nice to see how when things line up so perfectly. But yeah, I think today is just gonna be a range day. I don't know if you'd call that a range day, but let's see how we treat this new week opening gap. came up, tapped the bottom of the new week opening gap. Hold on, I'm going to check out NASDAQ real quick. I want to see if... So this right here was the equivalent NASDAQ equivalent of what we took on ES. And I want to see how many handles it delivered from the bottom. So NASDAQ would have easily delivered our 10 handles all the way down to 30. Yeah, but NASDAQ ultimately ended up respecting this higher fair value gap the same way ES did. Just got a little too eager on the stop. So you can see we tapped the bottom of that new week opening gap, came back down. I'd expect this down close candle right here to be a bullish order block. I'd want to see it hold price up. But if we just came down through it, it's a wash. See in the 5 minute, looks like we just retraced back to hit that 5 minute fair value gap, come back down, which also coincided with this 15 minute fair value gap right here. We will see what the afternoon brings. If we stay within this range going into the afternoon, I probably wouldn't be too interested in anything. Actually, I'm not going to trade the afternoon. I'm just going to come out and say it. I might watch price on my own, but probably won't be taking any trades until tomorrow. I'll show you guys one last time. I'll go over the entry for today. Took a small loss. So a little review. Gave me the narrative to go short was on the higher time frame, how we came up and we just wicked across. So these lines right here are the quarters of this daily fair value gap. So you can see on the 5 minute, we came up above the new week opening gap, came back down to the 50% level of this daily fair value gap, respected it, broke a new high. On that high, we went up to 75% of the daily fair value gap, couldn't close above that on the 5 minute or the 15 minute. And then you can see these 2 1 minute body candles here on the right also started to reject it. Got an aggressive price leg lower. I liked how we broke this swing low. It was a swing low on the 5 minute. It was a swing low on the 1 minute. We broke it. It got us below this new week opening gap. I like that. And then what we did, we were still in between, excuse me, we were in this opening range. So we didn't even have a return into a fair value gap all the way up until right here. And what my thought process was right here was, it's 9:55. In 5 minutes, we will be looking for the silver bullet, which the entry happens in that 1 hour, 10 to 11. So I'm okay with not entering here and waiting for the next entry. So we saw it react off of here. I didn't enter there, and I just use it as narrative. We came down, broke a lower low, and I saw these two civvies. And you know what probably ended up happening was I got a little overzealous with this drop, and I was like, we're going down. Let me enter on the first retracement. So I entered right here. I watched it wick into it, and then it kind of pulled back. And when it pulled back, I entered 2 with the market order. And I had this fair value gap outlined. And in my head, I set it right when I entered. I was like, I wouldn't be bullish until we broke this swing high. And even though I said that, as I watched price kind of stagnate here, I just inched my stop up a little too close. Well, definitely too close. It's permissible for us to trade back up into here. So we traded up in, and that I didn't even exit on this. What happened was we came down and just stuttered, and then I squeaked my stop up. If anything, in hindsight, you could have put your stop above this swing high. You could have put it I still would have been in the trade. Entering at the bottom of this fair value gap right here, 5 handles was this red line, which was the bottom of the daily fair value gap. It coincided with the top of this green, this 4-hour fair value gap. It coincided with that. So that's what I was targeting. If we had waited for the further pullback up into this silver bullet, we would have gotten our 5 handles. I think 5 handles was we would have gotten our 5 handles. So that's one for the journal. I will admit that moving my stop prematurely is something I've been pretty guilty of in the past. Even when we were down here and I moved my stop, so I originally had the stop up here. And then when I trailed it, even if I trailed it to the top of this candle that makes the SIBI, we would have still been in. I can't really say that though, because we never would have hit our price target. So it looks like the real entry was this. Should have known. Journaling. So this is a great thing for the journal. When I got on this morning, I was talking about how I mentioned CPI tomorrow. I mentioned we'd be looking for internal range liquidity, short scalps. And with all that being said, if it ever comes to a similar scenario where it's low probability day on the higher time frames, we can really argue a narrative for both sides, but we're going to look for some scalps. Then if we ever, because this is pretty common, it's pretty common to get 2 large fair value gaps, and it's you want to enter on the first one because you don't want to miss the trade. And then, but sometimes you overthink, you second guess yourself, and this isn't even a huge stop. I think this was, let's see what the stop would have been. It wouldn't have even have been it would have been about a 5 handle stop. So that's not even a very large stop. It was more of a overthinking, second guessing myself. But anyway, so great part of journaling is what I'll do is I will make the focus of my journal today around, okay, what was the environment day before news driver, we had these two large fair value gaps, and I entered on the first one. I'll talk about how I moved my stop a little too close. I'll talk about how, and what I do in my journal too is I will take a screenshot of this specific scenario, and I will just kind of speak about how, we knew it was a low probability day, or wasn't going to be the cleanest day. We should have chose this fair value gap instead of this fair value gap. Yeah. So, thank you guys for your time. I will be logging off. Remember, CPI tomorrow, and enjoy the rest of your day.